What is up, guys? My name is Hassan and welcome back, everyone. As you guys know, my channel is called Hassan Investing. So I'm going to quickly go over the origin of this name. So the name Hassan is actually a Arabic name. So we're going to pull up Google. So the Hassan in Arabic means pretty much handsome or good. So here we can see the name written out in Arabic. Ha, Sin, Noon. These are the three alphabetic letters that make up the word or the name Hassan. So Hassan investing in a sense pretty much means good investing. So I'm going to quickly go over what it means to be a good investor. For us to be a good investor, we have to reduce the amount of mistakes we make as an investor. A common error that I see everyone making is that they hold a stock for a few months and then shortly after they sell it. I realize that many of the stocks that I've held for a few months, I should have held for a lot longer. For example, let's take a look at AMD. So we see AMD right here. We're going to pull up the 5-year chart. A lot of time I see people buying a stock at say for $5 and shortly after they sell it for $10 only to see the stock go to $60, $70, $80 in 2 or 3 years. So we're going to take a look at AMD right here. So we can see AMD at one point it was $5 and then there was a lot of people after a short amount of time they sold it for around $10 thinking, oh, I made 100% of my money or I doubled my money, and to realize that this stock continued to climb as the years went on to $50, $60, $70 or even $80 at one point. Simply put, don't sell out your winners too early. If anything, you might want to take some profits off here and there, but let the remainder of the most of the company grow so you can actually make that long-term gain. A lot of people go for that 20% gain, 30% gain. I actually like to go for the 200% gain. So this is my M1 Finance portfolio, which you guys can see right here. I have currently around $10,100. Today I'm going to show you guys my M1 Finance portfolio and the companies I'm invested in. In addition, give you guys an update on my monthly tracking sheet and the dividends I have received for the last 2 months. As always, don't forget to check out the disclaimer in the description below because it is important as an investor that you guys do your own due diligence before you buy other people's company. Make sure you hold yourself accountable. We can see we're going to start with my M1 Finance portfolio. We're going to look at our 1-day chart. We can see for 1 day I'm down about $30. And if we scroll down to 1 week, I'm up about $235, which is about 2.3%. So in that 1 week, I earned around $15.61 in dividend payment. This is pretty much, I didn't even have to work for it. With this $15, I can go have a nice meal at a local fast food restaurant. So if we look at for 1 month, I'm up about $570 or almost 6%. And in that 1 month, I made almost $26 in dividend payment, which I did not even have to work. One of the purpose of this portfolio is to make passive income for income, which is the opposite of active income. We all know that active income is when we work, we get paid. Passive income is when we don't have to work, but we still have income coming in. And then if we look at it for 1 quarter or 3 months, I made about $1,200 or 15% in dividend payment. And then we're going to take a look at for 1 week or 1 year. We made in the last 1 year, we made almost $300 or $297 in dividend payment and a total gain of 10% for the year, which is I'm actually decent. I'm happy with that 10%. And if we look at it for all time, which is a little bit over 1 year, we made a profit of 12.4% or $650. Out of the $650, almost $400 was from dividend payment. So now I want to show you guys the S&P 500. So this is the S&P 500. In other words, this is like the market. And we're going to pull up for the 1 year. We can see that for the 1 year, it took a really big dip during the coronavirus. And now after that, it's slowly and steadily increasing in our stock appreciation. So I want to just look at it, how well the S&P 500 has been doing for the last 12 months. And we can see that they're up almost 16%. And this is totally is not fully accurate because they don't include the dividends. So if they include the dividends, it would actually be a little bit higher than the 15.6%. From the March dip to now, the S&P 500 has been up almost 50% or 49%. One of the reasons why it has been doing so well was because of the unemployment rate. So we're going to pull up the unemployment rate. So we can see that the United States unemployment rate has dropped to 10.2% in July 2020 from 11% in June. And this is below the market expectation. So I'm going to what they're talking about. The unemployment rate was around 11.1%, but in July it actually decreased to 10.2%. So we can see that the month after month, the unemployment rate has been going down since April, and this is one of the main reasons why the stock market has been rallying rapidly. If the unemployment trend continues to decrease month after month, even past August, September, October, November, if it continues to decrease and this virus is not affecting us, we should see the market reaching higher and higher. People are going back to work and the economy is recovering. We don't know if that's going to happen or not, but according to this trend, it looks like it should continue, hopefully, if we don't have a second outbreak. So another thing I want to point out is the expectation. We can see that in July, the analysts, they're expecting it, or the forecast, to be 10.5% in unemployment rate. However, in July, it was actually lower than expected. It was 10.2%, so which shot up the market. So here I want to talk about the forecast a little bit. I love it when analysts are upset, because whenever they're upset, I capitalize on their emotion. Like, for example, they expected the unemployment rate to be around 10.5%, but in actual, the unemployment rate was about 10.2%. So it was lower than the analyst expectation, which made the market shoot up even more. But I already knew the virus was coming down and the unemployment rate was going to decrease. So I started to buy heavily, even though it was very close to it, or it was under the analyst expectation, which is positive news for the market. It shot up, but I already knew the market was going down. So it's really funny that these analysts, they always try to predict the future when in reality it doesn't really matter. Now I want to show you guys my monthly dividend chart and the reason why I invest month after month. We can see this is my monthly dividend income. At one point, I actually started off in a zero payment. We can see right here in January 2019, I had $0 in dividend payment. As the months continued, I started increasing dividends. So because I don't want the chart to look too messy, I'm going to take out first 3 months, and then we can see that the overall trend of this monthly dividend income is increasing, and this is pretty much my average line. So if this line continues month after month, I should see about $30 in dividend payment very soon, or at least an average. I'm just going to go over the last few months. In January, I received around $14, February $20, and then for March, I received about almost $40, which was $38, and then $25, $20, $33, and then in July it was $14. One of the reasons why it's lower in July is because July just pays a little bit less than March, or one of the higher months. And also, few of my companies, they actually cut their dividend. That's why for the month of July is actually be lower than the last 3 months, which was around 3 months ago. I made around $25, but instead I received $14. I lost almost $10 in $11 in dividend payment, which is fine because I know in the long run I'm actually going to go a lot higher, and this is going to increase upwards. So another thing that I want to point out, so far I made around $285 since I started tracking this monthly dividend chart. So guys, if you guys haven't made one of these charts, make sure you guys make one of these charts so you can visually see the amount of dividends you're coming in on a monthly basis. So for the last 6 months, I'm averaging around $25 in dividend payment, which is great. I can almost pay my phone bill with this money. Not yet, but eventually I'll be able to live off some of my dividend income. So now I want to show you guys some of the holdings that I have in my M1 Finance portfolio. So I actually have 7 sectors. Majority of my holding we can see is in technology, and my least holding is in basic materials. If we look here, my number 1 holding, or my number 1 sector, is tech. I'm actually up almost 54%, or over $1,000. And then after that, we're up around communications. I'm up 49%, and then basic materials 40%. So now I'm going to show you guys some of my holdings that I have, and energy being one of my worst performer. So right now I want to point out my basic materials because in my last video I covered tech. So now I'm just going to show you guys some of the holdings I have in my basic material. So these I have 1, 2, 3, 4 companies. These are solid companies that you guys should take a look at. With Rio, Lynn, and then this WD-40, and then Kirkland Lake Gold. I'm actually up here 20%. I'm going to buy more of it in this account. As you guys know, I have a Robinhood Portfolio, which I show. And I also made a stock analysis video on Kirkland Gold. So make sure you guys check that out. It's an awesome, amazing, solid company that's going to give us not 20%, it should give us 200% and maybe in a year or two. So I want to show you guys another sector that I'm holding. Remember, in this sector, I received, or at least for the short period, almost $5 in dividend payment. Another sector that I want to show you guys is my communication service. I only have actually one company in it. I have Activision Blizzard. I'm up around 49% or over $100. And then I already covered basic materials. We're going to go to our consumer cyclical. I'm up around 34% in total return, which is around $529, and $12 which is in dividend payments. So now I want to show you guys the holdings that I have. So one of the best part about following my channel versus all the other channels out there is that I talk about unique companies that no one else is talking about. Like for example, I don't think anyone else is talking about Escalade, ticker symbol ESCA. I'm up 218% just in this one holding. So make sure you guys check out this company. Expedia up 75%, Marine Products up 69% or 70%. These are companies that hardly anybody is holding on to in their portfolio. So make sure you guys do your own due diligence, look into it. These are solid companies. I'm not recommending them, but it's a company worth taking a look at. So we have Escalade, Expedia, MPX. I'm up on 70%, Marine Products. GPC 53%, Gentech, another solid company, 26%, Tapestry 24%, Packaging, I'm up 16%, and then I have VFC around 14%, and then Contour Brand, I'm actually down around 11%. I'm actually planning to add more of it so I can average down. Remember, one thing that you want to do is that you never want to buy all at once, and you never want to sell all at once. So if you buy, say you want to buy a total of 100 shares and you buy 100 shares, and then the next 2 weeks later or the next day the stock goes down, you can no longer average down because you have already spent all your money. So it's really important that you never buy all at once, nor you sell all at once. Remember, you want to let your winners run. That's one of the common mistakes or the common error that we talked about beginning of this video. Next thing I want to do is I want to show you guys a couple of other holdings that I have in my M1 Finance portfolio. We're going to go to healthcare. I'm up around 19%, total of $192. So healthcare, again, I should have some unique companies. Pfizer, PetMed, Johnson & Johnson, and Merck. So you can see that I'm up 23%, 21%, 14%, 10%. Another cool fact about me is that this is my 11th year investing in the stock market. I have gained experience over the years. I have made mistakes and I have learned from my mistakes. There's a saying that smart people, they learn from their mistakes, but the wise, they learn from other people's mistakes. So it's really important that you guys learn from other people, and that way you don't go through that trial and error. You don't go through that failure. You can just learn it from someone else, and that way maybe it will save you some money or two. Guys, if you guys made it this far, make sure you guys subscribe to the channel, hit the like button, and just support the channel. It'll help me reach out more people. Remember, in YouTube, if you hit the like button, it actually promotes your channel. Next thing I want to show you guys is industrials. In industrials, we have Emerson Electric, we have AOS, 3M, Honeywell, and then waste management. I actually made a stock analysis video on waste management. So make sure you guys check that out. Now we're going to go to our worst performer, which is around, I have 12%, but I plan to hold at least 10% of my portfolio in energy. I'm down around 17% or $256, but out of the 256, the reason I'm only down 256, not 307, is because I made $51 in dividend payment. Another cool thing about energy stock is that they are usually high yielding dividend paying companies. So here I have 3 companies. I have PBA, MMP, VET. So out of these 3 companies, VET, they cut their dividends. So 2 MMP and PBA is still paying us dividends. PBA is paying us in a monthly monthly, and MMP is actually a pipeline company. So on all three of the companies, I'm down. Now I want to show you guys the dividends I have been paid for the last 2 months. So here now we're going to go to our activity and we want to filter by dividends only. And then we want to select the date range. All right, so now we're going to show you my dividends I received for the month of June and July, and we're going to scroll down. So in June 11th, I received 90 cents from Skyworks Solution. June 12th, I received $5.25 from 3M, and then we can see that June 15th, this negative 44 cents is actually tax that I had to pay in foreign taxes to the country of Canada, because PBA is actually a Canadian company, a pipeline company that paid me on a monthly basis, but they take their 15%. What the good thing about this is that since I paid my 15% in taxes, I actually get this tax money back when I do my tax return end of the year. And then Lynn paid me on June 17th $1.10. Waste Management paid me $1.20. VFC paid me $1.86. And then we have Nvidia paid me 28 cents. So it might not be a lot, but all these dividends, $1, $1, $2, $3, but they actually add up end of the month. I'm literally getting paid every few days in dividend income. Broadcom paid me $3.84, and then Garmin paid me $1.48. GPC paid me $2.65, and then we have Merck paid me $1.22. And then again, we have a negative dividend payment, meaning I paid 4 cents in tax to Kirkland Lake Gold, because this is also another Canadian company, which paid me 26 cents. And then we got PKG, $2.61. Again, for the month of July, I had to pay foreign tax again of 45 cents, because again, PBA is a monthly dividend paying company, which paid on a monthly basis. So I have to pay monthly dividend tax to the country of Canada. And then Cisco, $3. And then I have again Gentex, $1.26, and then I have WD-40 paying me 14 cents. So guys, make sure you guys hit the like button, make sure you guys hit the subscribe button. Now I want to take some viewers' question before we end the video. So this question we have from Ian. So his question is that Square just posted an earning and their revenue went up, but they posted another loss. Why does so many companies lose money for so long in the beginning? The reason why they lose so much money is because of tax purposes, and because that's just their strategy. They focus on growing, investing, acquiring new customers, and they spend a lot of their money, like Square, they spend a lot of their money on infrastructure and on advertising. They may also get a tax break if they don't retain any earnings. And this is one of the strategies that Amazon did, and look at where Amazon is now. So this is just their investing philosophy, is that they try to continue to reinvest and grow their money. Instead of giving it back to their shareholders as dividends, they want to continue to grow as fast as they can. And we're going to just quickly take a look at the company Square. So here we have Square. We can see their revenues right here, year after year, or quarter after quarter, they're increasing their revenue. We can see that here in 2019 they made around 1.2 billion, but in June 2020 they made almost 1.9, or they made almost $2 billion in revenue. So another thing I like to look at is, just because their revenue is growing, is their profits or their gross profit is increasing or not. Now, if we look at it, yes, nicely year after year, their gross profit is increasing. So you talked about having negative earning. Let's just go down their earning per share. We can see here, yes, they have a negative earning around March 2020, 24 cents, and then June 2020 of negative 3 cents per share. This is just their investing philosophy. Yes, they're losing money, but in the long run, they're going to be heavily profitable, because they're right now trying to acquire as many customers as quickly as possible and trying to save money in their taxes. Like, remember, Amazon does this and few other companies. These are mostly done by growth companies. They want to grow as much as possible, even though they're losing money. Look what happened to Tesla. So this is also a solid investing philosophy, but I try to invest in companies that have consistent, predictable profits, and they like to pay out their shareholders. I like my company to appreciate in value. I also like to get the dividend income. As always, Thank you. If you haven't subscribed yet, make sure you guys subscribe and check out my analysis video. As always, thank you. See you next time.